Right, the dollar Swiss then. The US dollar, the dollar index. We take a look in the currency indices. The US dollar is the only currency index that is actually positive at the end of this week. Looking at the dollar index on this basis, we are at the 76.95 and the 77.59, two significant levels. We've been holding the 76.95 and the 76.75 pretty well on the balance of this week. We're well off the lows in the dollar index, and the dollar has come up against some buying and above the 77.59. This is the equivalent of the 136.66 area in the euro dollar. But this momentum move up in the US dollar is giving us a reason to look for opportunities to be part of the long side. And if we go to the dollar Swiss, then the Swiss franc, has been in a decline since the intervention. We've been on a move down, and the 88.95 in the dollar Swiss is a significant level around which we are trading right now. We're looking to end the week camped around this significant level. So if we look at the daily, there's a good bit of momentum going from the August lows. We're making higher highs and higher lows in this daily. We've got a significant pullback on which we can generate a gift line, an extended gift line of this corrective move. The break of this gift coincides with the 88.95 break. So in terms of our structural long, okay, we're going to be looking to be long above 88.95. Structural short is not evident until we break this low here. That's going to be the nearest structural short point, indicated by this blue line here, is 85.51. So the structural short is 85.51. Going to the 200 tick, here we are at the 89, which is our significant point and our structural long on the daily. We've got a 1 day high here, and the highest point just made above the 89 is 89.05, so that's going to be our long point. In terms of the short point on the 200 tick, it's twofold really. We're in a bit of a no man's land here. If we look at the daily, the 1 day and 2 day low are pretty much the same level on the 200 tick, in between which we haven't really got a clear opportunity to go short, because we can't see a structural failure on the 200 tick. However, if we trade up above the 89 and then post a structural failure, our short point becomes that significant level of 89. But that's only on the basis that we do trade above there and then fail and come back below the 1 day high and the 89. Bar that, the 1 day low has to be our short point, and that therefore is 87.61. Okay, if we're going long at the 89 indicated by the green line, our long stop, as we said, if we go above here, fail and come down, our short point will be the one day high in the structure, so our stop therefore needs to be the other side of the one day low, one day high, sorry, and so it would be, we're looking at the 88.90 level. So the long stop, other side of the one day high at 88.90. And on the short side then, as the broad trend is up, we don't want a mean reverting trade through here. If we're going short the one day low, again we want to be protecting ourselves from a move back above that one day low. So on the short side, our short stop needs to be the other side of one day low. And maybe if you can stretch, I mean, what's this, 15 pips, if you can stretch to have the stop above the 2 day low as well, but I'd say that's probably not necessary. We can take into account this turning point here and this consolidation in the Tokyo session from which we bounce. So if we have our stop 87.85, the short stop, so the short stop in the dollar Swiss is 87.85. So bias is to the long side. We've got a bit of a firmer dollar, and looks like we're going to finish the week in and around that significant level of 89. Okay.